Hello, everybody. Welcome to Wednesday, a very wild day in the stock market today. The S&P 500 was up 9.5% today. It's a green shirt day, obviously, but it doesn't seem to do it justice. Actually, I should come up with a different color for these kind of crazy days. But nonetheless, what happened today was the market was just going along, and then all of a sudden we had this 90-day pause, which most of you know about, I'm sure by now. Still keeping the 10% tariff in place across the board on all countries. And then China was up from 104% to 125% because last night China upped the U.S. tariff from 34 to 84. So they're kind of matching us. They did the 34 like we did the 50. And so don't be surprised if we don't see them match this also. So that's still a big deal. Matter of fact, the total tariffs that are out there right now are still about 10 times higher than they were before we started all this. But the market was, very pleased to see that there was, some potential negotiation going on, a pause period of time for people to be able to see, what could be accomplished to reduce these overall tariffs. I guess we have to determine too at some point in time, ignoring China, because China at 125% is going to be damaging, but we don't know what that's going to stay at. If we just look at this 10% tariff across the board, what happens with that? How bad is that? I remember in 2018, we thought that the 10% tariffs that they were doing on China at the time were going to be really damaging. And of course, they weren't in the end. We ended up recovering pretty quickly. I will say in 2018, the Federal Reserve stepped in and started to lower rates after tariffs, were stopped in terms of the new ones were stopped being placed. And so, the market did quite well and recovered. The Federal Reserve not chairman, one of the Federal Reserve governors came out today and said again, I think this is the third interview I've heard in the last 2 days, the Fed isn't really that interested in coming out and bailing out the market at this point, mainly because the size of these tariffs could be increasing prices. And so if they lower, interest rates to try to stimulate the economy and make sure we don't have a big recession or a depression, you're going to have a situation where it could raise prices even more and inflation could get out of control. So that's probably, they're a little bit, stuck as to where they would go and what they should do. So I don't know that they're going to be the bailout. But I mentioned before, it's not really about watching the market. It's about watching what's being said. What does Trump say? What does Congress do? What does the Federal Reserve do? And what does the courts do, right? I mean, those are the things that are going to happen to kind of determine how this plays out as far as that goes. And so today was a welcome, move, and the market moves very strongly. We moved back in about 25% of the assets that we had under management that we took out on Friday. And so we were at 23% exposure to stock market, as I mentioned before, just because of pieces that we still had that had high gains we didn't want to sell. And now we're at about 33% exposure to the stock market. And so this is what I was talking about before. We'll respond to the news. We're not out of the woods. So you shouldn't be, in my opinion, completely back in because, we've already heard from companies like Walmart and what have you talking about how this is going to impact their earnings even already before these tariffs have really had any kick in, just because, again, people are listening to what's happening and responding to what's happening, and consumer spending and really the spenders, the consumers and the CEOs could be kind of, really pulling back. Delta announced today that, they're seeing a lot less flights booked. So, when we get into earnings season here and we start to hear all of these different things, and especially when we start to hear about forward guidance, there could be some problems there. But there's some good opportunities here. I mean, the market that we bought back into today, was a lot lower than it was at the high point back in February. And, I'm not too worried about missing out on upside here. In this particular kind of market, my saying is always, I'd rather lose money I could have had than lose money that I do have. And so if I sit in T-bills with something and the market takes off, it's okay. Let's wait until we start to see some strength. We want to be in the markets when there's more certainty and there's more things going in the direction, and we can say, with a bit more confidence that we can make money in that market. One of the key things that happened today that was very fascinating, and really over the last couple of days, is the bond market started to really struggle. Bond market is much more important to the economy overall than the stock market. If the stock market is a baseball, the bond market is a basketball. So, it's how we fund our deficit. If they can't sell treasuries, then we've got problems. And so there's a lot of inroads that are coming in. China could be selling bonds. When you raise trade barriers, there's less foreign goods coming in. A lot of times these foreign companies will keep money in dollars and they'll buy U.S. treasuries to kind of park them So again, if you cut down trade, you could cut down that inflow of dollars into treasuries. And I think we're probably seeing an erosion of confidence in the country as a safe haven. How's the U.S. going to be doing in all of this, and how is this going to work as far as that goes? So, uh, if this is all one grand, negotiating ploy, and we end up with better tariffs across the board, both what we're charging and what others are charging, this will be a success. I said that back, before the Rose Garden speech and right after it also. And so it's a little hard to tell for sure. That's what they're trying to do. We get conflicting information from all kinds of different sources, but that's what we're going to watch for. A 90-day pause makes you think that they're looking more towards the possibility of having time to do the negotiations to kind of get these things set up. So that's a good thing. It's worth, buying into at least a little bit and seeing how things play out. So anyway, that's what's going on today. I look forward to being able to see what's going to happen tomorrow. Every day is a new day, that's for sure. And we'll talk to you then. Thank you very much.